What's up, everyone? All right, so in this episode, I'm going to review for you my day trading performance in the month of March. March in review. Had some big green days, had some big red days, but finished the month in the green, which is what's important. And this also marks the end of the first quarter. So I'm going to break down for you my performance in these last 3 months. So first quarter of the year, that's kind of setting the foundation. I didn't do as well as I would have liked, but I'm green, which is important, and I did okay. So I'll break that down for you as well. As always, those tuning in, maybe for the first time, I hope you hit the thumbs up. I hope you're subscribed to the channel. I will see you first thing tomorrow morning for the morning show, as always. And remember that trading is risky. My results are not typical, so please take it slow and trade in a simulator before you put real money on the line. All right, let's jump into it, breaking down March in review. All right, everyone, so we're gonna do March month in review. It's also the end of the first quarter, so we'll review the metrics of the first quarter. First quarter, gross profit, $274,000. Net profit after fees and commissions, $202,000. So $74,000 in fees and commissions is pretty substantial. Unfortunately, this is the result of having a fairly choppy first quarter. You know, I had gains of 100,000, then I gave them back, and then I made it back, but then lost, and then gained, and then lost and gained. So, you know, if I didn't have those drawdowns, if you looked at my, let's see, win versus loss days, just for instance, you know, $479,000 in profit. So if my loss days had been significantly smaller or there had been fewer of them, I'd be up a lot more on the year, and the commissions wouldn't be as much of a factor. But right now, commissions are certainly a disproportionately large percentage of my gross profit, probably the largest it's ever been. And I would say that that's just because I've been trading with larger size, and so my ECN fees are higher. I've been trading very actively. I've already taken over 1,000 trades so far in this period of time. And we can compare this first quarter to first quarter of last year or the year before, just to sort of see how it compares and kind of get a little bit of a reality check there. But in any case, gross profit 274. We'll switch to net profit. Net profit 200. Average daily gain about $3,500 a day. It's a little light. I mean, I'm not usually content if I'm up 3,500 on the day. I'm like, oh, that's not a great day. Today I'm up 2,600, and I feel like it's not a great day. But in fact, I've only been averaging 3,500 a day this year. My average winner is about 1,100. My average loser is almost 1,700. That's not great. I've had a couple big losses this year. I mean, not catastrophic, but you know, the biggest loss is 38,000, and that's bigger than my biggest winner of 22,000. 65% accuracy this year. That seems a little lower. Trades 4 minutes long. So, you know, at the end of the first quarter, days and times where I've been trading the best. A little bit of an anomaly I think here that I'm red on Tuesdays. I don't think there's a lot to learn about that. I think it's just the luck of the draw. Thursdays have been better this year, but and then between 10 a.m. and 11 a.m. has not been great for me, which is kind of interesting. You would think, you know, that's still morning. Why is that not as good? I've been doing well between 7 and 8, 8 and 9, and 9 and 10, but between 10 and 11, I lose money. Now, that could be because between 10 and 11, that's kind of the time of the day where if I'm red from pre-market and up till 10 a.m., it could be between 10 and 11 that I kind of take that home run, Hail Mary trade to recoup the day. And when it goes wrong, and it has several times, then that's where I blow out max loss, and I'm done by 11. So then relatively small profits after that, but net profitable between 11 and 4 p.m. I mean, this is net profit. So making some money in the afternoon, but it doesn't work really well with my schedule to trade in the afternoons. I'm just not in a place today where I have the schedule that I had a few years ago. So I don't trade as frequently that time of day. The trade distribution is significantly lower, but I am finding some profit. But for sure, my sweet spot is between 9 and 10, between 8 and 10, really. Between 8 and 10 is where I'm doing the very best. And then between 10 and 11, I clearly have to be a little bit more careful. January was 25,000. February was 86. March is 90. Moving in the right direction. So that's good. Price and volume. Not making a lot on stocks under 2. Doing better between 2 and 20. And not making a lot over 20. So also noteworthy there. Generally making more money when I take more shares. That makes sense. Nothing unusual about that. Instrument. So on this one, this is a big takeaway here, that my performance by the instrument's relative volume versus its 50-day average, that basically all of my profit for the year, the vast majority of it is right here. Well, I guess this would be 50% of my profit plus a little bit there, but the majority of my profit, and where it's clearly that I'm doing the best, is on stocks with 5 times relative volume or higher. Now, today, interestingly, so our leading, one of the stocks that we were watching today, LGVN, the relative volume was 14, but it was pretty choppy. IMTE, the relative volume was probably a little lower, and so was DRCT. We really didn't have today a super obvious gapper that was really clean. And as a result, I didn't do very well today. Focusing on stocks with 5 times relative volume is where I'll do better. Stocks like LLL. This was a stock that the previous day had 135,000 shares of volume, and the next day had 90 million shares of volume. So think about that in terms of relative volume. The relative volume was so crazy high, the stock went bananas. NRSN, another stock where the previous day's volume was 340,000. The next day, 160 million shares. And that, of course, is because of stocks that are squeezing up with news. Today just happened to be a day, and it's Friday, where we didn't have a lot of good breaking news, and that's just sometimes the way it goes. So Friday, finishing the week, but now the beginning of the new month, sort of a slow day, and that's okay. All right, so back to the metrics. So we've taken kind of a high-level look at the first quarter. So why don't we go and dial in, and you could also see performance by instrument movement is predominantly stocks up 10% or more. That makes sense. So if a stock doesn't have the potential to go up 10% or more, probably shouldn't even touch it. All right, so now let's just look at the month of March. Finished March at 90,000, $4,000 average daily gain. And so at this point, I think setting my goal to 5,000 a day is the right thing to do. My goal last year was 20,000 a day. And I mean, I was hitting it regularly, consistently. My daily average for all of last year, let's see, we'll just look real quick. 12, 31, 20, 21. I was averaging 16,000 a day, 4 times what I've been averaging this first quarter. But this first quarter, we've been plagued with a very weak and choppy market, which is in a large part due to what's going on in Eastern Europe and Russia. That has absolutely put a damper on things. It slowed things down. And so you can make money. Well, I can't say you. I can certainly make money in a bear market and in a choppy market, but I will make more money in a bullish market. So right now it's about keeping my head above water, tucking away some profit, trying to just be consistent, and waiting until we get back into a more bullish market or a true bull market. If we remain in a bear market, then I can expect to have a year where I make less money. It doesn't mean I'm not making money. It just means I'm making less. And that's mostly because the opportunities are fewer and further between. So we'll see a cluster of a couple of really good opportunities, and then it's like dead, for 3 or 4 days or maybe longer. And on those days where it's dead, one of the biggest challenges is having the discipline not to overtrade. If it's really slow and there's nothing to trade, kind of like today, sometimes the best bet is to not touch anything at all, or to trade with really small share size, which is what I did today, and that was successful. $2,600, a year ago, I would have been like, it's not even worth it. Why even bother trading if there's nothing that good at all? But today, beggars can't be choosers, so I have to be willing to take some trades, but with smaller size, just to kind of keep myself in the market, keep myself active. Otherwise, I might find myself taking, 4, 5, 6, 7, 8 days off of trading, and then breaking the ice for that first trade starts to become difficult. So I think it is important to actively trade, but just manage the risk. So back to the month of March here. Oops. So $90,000 profit. Again, as always, I'll say it a couple times during this video, my results are not typical. My experience trading has not been typical. So take it slow. Beginner traders are very likely to lose money. You should trade in a simulator before you put real money on the line. So $4,000 average gain, about $1,100 average winner, $1,400 average loser. So the average loser is a little bit smaller this month. Biggest loss, the VIX. What the heck was I doing trading the VIX? What kind of idiot am I? Well, the VIX, I traded like an idiot on this day where it kind of just went a little crazy. It squeezed up big time here. It went from 26 to 30, and then it dropped in this candle all the way back down to 28. And sure enough, I caught the drop, $36,000 in the red. What a terrible trade. So did it have 5 times relative volume? Nope. This was not the right type of stock for me to be trading. I should not have touched it. I need to ask myself that question before I'm taking a trade, or before I'm thinking about taking a trade. Does this have the potential to go up 10% for my entry? Number one. Number two, does it have the potential to have 5 times relative volume, or does it already have 5 times relative volume? There may be some instances where a stock, 8:30 has breaking news and starts squeezing up, and initially the relative volume might only be 1 or 2 times regular, but it'll go up very quickly, especially if it has good news. So I will sometimes anticipate that. Accuracy in March a little lower at 61%. So a little lower there. Average hold time, that's all pretty much the same. Commissions, a little high. I mean, and this is kind of the tough thing, is that commissions about 1/3 of my profit right now. And I was scratching my head. I was actually wondering, should I, during this kind of cold bear market, should I just trade in my TD Ameritrade account? If I can't take big size and I'm not catching those big home run trades, does it really matter if I trade with a direct access broker, with 200 shares with small size? I don't know if it really matters. 200 shares would be on a higher price stock, but I don't know. I'm not really sure. I am scratching my head because this is yet another month where my commissions were quite a bit higher than they needed to be. But again, on this month, I went up to a gain of 42,000. And then at the middle of the month, I was back to red 10,000. And then from there, I made 100 grand, just about, from red 10 all the way up to there. So, if I hadn't caught these big losses. So let's look at the calendar here. So calendar, so a $20,000 loss there, and then a $19,000 loss there. These are pretty big losses. This day, I basically never went, I just immediately went red and I didn't recover. And my commissions were $2,000, which is 10% of my profit, right? Now this day, down 19,000, I went red and I never got back. I tried to come back in the afternoon and dug the hole deeper. Commissions were $1,200. So a little less than 10% of profits. And then here's $26,000 red day, in really good shape until the VIX. And I got smoked on the VIX. So, just like that, I went from up 20 grand on the day to down. I mean, this was brutal. I had 2 back-to-back huge losses on that day. Went from up 25,000 to down 30 grand. That's a $50,000 swing. That was a bad day. So I had a few bad days in March, 3 pretty bad days. This wasn't as bad here on this particular day. You could see I went red, then green, then red, then green. I was kind of all over the place, back to red. Afternoon trade, dug the hole deeper. So didn't trade super well. Monday of this week, that wasn't too bad. Made it back Tuesday. Wednesday was okay. Thursday was good. So yeah, just overall a little choppy. I'm looking at the 10th here and I'm kind of like, did I really not trade on the 10th? Let me just double check my my trading account, just make sure I didn't forget to import one day. I don't think I did, but I'll just confirm it. So let's let's see. So I've got my two accounts. I have my margin account, and then I have my retirement account. So in my margin account, let's see, I didn't trade on the 10th. And let's check the retirement account. Maybe it was just a no trade day. I don't recall. You know, and it speaks to how quickly it's like water under the bridge. You know, I had to check this day to remember what happened. I didn't remember that I went up 25,000 and then went into the red, just looking at it on the calendar. It's very easy just to sort of, you know, you move on. And that's good. That's important. You don't want to hold on to, you know, those trades and the FOMO and everything else for a long time. It's not worth it. Yeah, no trades on the 10th. I don't know. I just didn't end up taking any trades that day. So anyways, so, you know, that's high level. Now let's compare month over month. We'll do a comparison of February. Let's see. So February 1st to the 28th, and then we'll compare March 1st to March 31st. You know, and all things considered, I can't complain at all. These were both two totally solid months. 86,000, 90,000. You know, average day was a little higher in February, less days in the month, and I took a couple days off. You know, but accuracy was also a little bit better in February at 65%. Profit loss ratio was a little worse. Average trade was the same. Biggest winner was smaller. Biggest loser was smaller. Commissions were half. My ECN fees were half. So I overtraded a bit. The total number of trades in March, 555. Only 370 in February. So fewer trades, higher accuracy, lower commissions, and that paid. So February, although I made a little less, was actually, in a lot of ways, a better month, which is interesting. If we go to the first month, January wasn't super great. So January, I made 25,000, and commissions, you know, fees and commissions were still lighter than they were in March. I really did rack up those fees and commissions in March. You know, but again, I only took 207 trades in February, or sorry, in January, but I took 555. So that was a pretty big month. Now we could compare, why don't we do a different comparison here? Why don't we compare the first quarter, 3/31/2022 on the left, to the first quarter. Let's do 2020 first. Well, we could do 2021. We could do last year. We'll just go in order. I just know that I'm going to be a little bit bummed out when I see this. Because last year was phenomenal. So let's see. Oops, sorry. First quarter, 1. All right. So last year I was at $1.4 million at this time. I had taken 2,800 trades, which is more than twice what I've taken in this first quarter. My accuracy was a little lower. My average daily gain was 25,000 per day. The market was hot. Everything is the same here in terms of, you know, average hold time. Average winning trades were twice as big. Average losers were twice as big. I was trading much more aggressively. I was trading with 3 times as much share size. And that correlated to more than 3 times as much profit, right? Just 3 times as much size, I'd be from, you know, 3 times 3, I'd be at like $10,000 a day. But I was at 25,000. So trading with 3 times as much size and making more per trade. My total commissions, 187,000 on fees, 30,000 on commissions. The market was hot, and we had GameStop in there. The biggest winner, biggest loser, 243. Biggest winner, 141. These were just huge trades. Man, the market was hot. It was just so hot. But you could see, in a way here, now that's, why is it cumulative P&L? Oh, did I do this one? No, I did that right. What in the world? Why is it showing my cumulative P&L is 0? Wait, where did I start? Oh, it's just doing the dates differently. Okay, it's not overlaying them in the same way. No, that's fine. Okay, whatever. Anyways, so okay, so that was 2021. That was GameStop. That was a little anomaly. So let's go back a year before. A year before, okay, now this makes me feel a little bit better. The year before, I was at 69,000 at the end of the first quarter. I'm at 200,000 now. Okay, now that puts it in perspective. That was 2020. That was more of a regular year. Let's look at 2019. 2019, generate report. At 111,000. Again, that was a bit of a more regular year. I've traded a lot more this year than at that time. And I've been trading now with 4 times as much share size, and I made twice as much money. My commissions are higher, but that's okay. Let's go to 2018. So 2018, 148, right? So between these 3 years, we were at 60 something, 111, 148, and then 1.4. Okay, the big anomaly of 2021. But this is more akin to what is average. So being at 200, if you take out the one kind of anomaly year, is actually not so bad. All right, so that makes me feel a little bit better about the first quarter. Where it has me positioned for the rest of the year. Well, I guess I've laid a bit of a foundation here. 3 months, averaging about $70,000 a month, approximately. At 200,000. So if I can continue to average $70,000 to $80,000 a month, then this can still be a year where I come up really close to $1 million. And that would be a great year, all things considered. If we have a couple of months where things get hot, we have a couple of parabolic momentum stocks, or if in the month of April, I can somehow manage to avoid a couple of these big red days like I had in March, or the big red days I had in February, or the big red days I had in January, then April could be the best month of the year. My biggest problem isn't really that I'm not making money. It's that I'm losing too much on my red days. And I think that this is something that a lot of traders are going to be familiar with. The frustration of having, 5 green days in a row and then giving it all back in 2 days. And then another 4 green days in a row and then giving a ton back, on the 5th day. Or having 9 green days in a row and then giving it all back to red. It's frustrating. I was red on the month here at the 15th of March, and I was like, come on, unbelievable, dude. This is ridiculous. I cannot get out of my own way. I'll have 4 or 5 green days and then it's gone. And then again, a green day, and then this day I was green and then it was gone. Just so frustrating to have that happen. If we look at the weeks, I was green this week, I was red this week, I was green this week, green this week, and green this week. So green 3 out of the 4 weeks, which is good. Even with the red days, the consistency is still, it's still acceptable, but it could be better. So what do I need to do for the month of April? If I really want to have April be a solid month, what should I do differently? And these are the questions you should be asking yourself as you're looking at your metrics for the first quarter and for the previous month. So I think that I need to keep reminding myself of the market that we're in. We're not in the crazy bull market that we had last year at this time. And it's not the time to be super aggressive. It's not the time to go out on a limb with high risk trades, because more often than not, they're going to fail. My metrics are telling me that I'm doing the best on stocks with 5 times relative volume. It's right there in the metrics. It's pointing me to profitability. My metrics are telling me focus on that. Don't trade stocks with lower relative volume as much as you can. Or maybe what I could say is, with lower relative volume, trade cautiously with small size until the relative volume increases. And if it exceeds 5, then you could start to be more aggressive. But until it exceeds 5, be very cautious. I do better on days where there's an obvious stock because it's a gapper with news. And on days like today when there's not one, it might just be playing with fire to take any trades at all. So if I'm going to trade, mitigate that risk with smaller share size. I did that well today. What else? So, there's the conversation about commissions and things like that. I'm hesitant to change anything. If I switch to a different broker, I don't want to, you get cautious. You don't want to break something in the strategy. I have my workflow, I've got my hotkeys, everything is kind of dialed in. Those same hotkeys don't work on TD Ameritrade. I know that. My experiences trading with TD Ameritrade have not been that great. So it feels like I'd kind of be probably shooting myself in the foot to go switch back there, and to think that, it's going to save me some on commission. Well, how much is it going to lose or cost me on poor order execution, or not having the hotkeys to be able to react quickly when I see something moving, either up or down. So I think realistically, staying the course, but if I can reduce the over trading of poor quality setups, right, and the churning that I've been doing, then that could help a lot, a lot. So I think I need to focus on trading a little bit less, trying to be content with a smaller daily goal of about 5,000. And sure, there'll be days where we have something that's hot that I might blow through that. And if I don't have as many red days, then my daily goal might start to creep back up towards, or my daily average might start to move back up towards 10,000. And then I might adjust the daily goal accordingly. But right now, I think keeping it smaller is good, so I can start to build more consistency. I'd like to have a strong month in the month of April. I'm off to a small start with $2,500, whatever, but it's a start. It's moving in the right direction. So now I just need to keep it going. So next week, sitting down on Monday, I need to remind myself that we're still in a bit of a choppy market. Go slow, look for obvious stocks, and when you see one that's obvious, be aggressive. My metrics are also telling me from time of day that I'm doing the best up until about 10 a.m. And 10 to 11 is a little bit of a tough period for me right now. I do think that that's probably because of over trading at that time of day, trying to recoup losses from the morning. But it could also be, I'm sure, instances of days where I was green at 10 a.m. and then by 11 I'm red and I over traded. So being aggressive early and then sizing down as the day goes on is another important technique. I went down $16,000 yesterday, and part of the problem was that instead of sizing down as the stock went higher, I sized up, and then I caught this big flush and it was bad. So, that's a lot of stuff to try to remember all at the same time. And in the moment when a stock is squeezing, you can lose sight of all of those lessons. And then you catch a huge loss, and then you're sitting here, saying the same exact things to yourself. And that's where, for me, I can have a real feeling of frustration, of sort of oscillating, like I'm in the same pattern. I'll say the same things, and then I'll have that big loss where I got overly aggressive, impulsive, traded too late in the day with too much size. It wasn't an obvious stock. It didn't have 5 times relative volume. And it's like, dude, are you kidding me? Why are you doing the same exact thing? And that's when I get really emotionally activated. I get frustrated myself for just sort of losing sight of these rules I set out. And I think that this is the sort of trap of the market, is that it's so easy in the moment to make an impulse decision, fall into the trap, and then you're in a bull trap, and then you catch a huge loss, and you're like, it's like I knew I shouldn't, and then I did it anyways. And so that's the muscle of discipline. And it's a practice that you have to be strengthening and working on day after day after day. And mine hasn't been as good. And that's partly that there's a lot of reasons for that, but none of them, I guess, are super important. What's most important is that I'm aware of it and I try to improve it. So that's, so I have kind of a lot of things. I wish I had like a very short list of just do this and this for next month and you'll be good. But I think for sure I could have avoided some of my biggest losses by only trading stocks with 5 times relative volume. So that's a big one. That's probably one of the most important. And reminding myself each morning to focus on obvious stocks and not overtrade. I think if I could carry those two things with me, and those two are kind of the same because 5 times relative volume most likely means the stock is obvious. So what if I can get through the month of April by only trading high relative volume stocks and obvious stocks? The only thing is that I would have days like today where I wouldn't have taken any trades. I would have a lot more no trade days. Well, maybe that's okay. Maybe I shouldn't be trading every single day in this type of market. Maybe I should be willing to sit on the sidelines if nothing looks great. It's better than having 3 red days in a row, right? So maybe that is the right move. I'm not sure if I'm ready to make that kind of commitment of trading that little, because I've seemed to just, I guess I like trading. Why do I like trading? It's a puzzle. It's fun. I see opportunities every single day. I think that I can be successful at a pattern if it breaks out successfully the way I think it will. And the reward is making some money. And so it's very tempting to step up to the plate every single day and try to be victorious in the market. Having the discipline to say, I'm not going to trade today, requires a degree of strength that I don't really have right now. But maybe that's something that I can work on for the month of April as well. So anyways, some food for thought for me, and I hope for you. So we're 25% of the way through the year, right? But we've still got a lot ahead of us. And I hope that the market does recover. I hope that things in Ukraine get better, and that the instability that's caused is in the rearview mirror. It's not yet, but I hope that it can be, not just for the sake of the market, but for the sake of the people that are in Ukraine, of course. It's a terrible thing that's happening. And so something that I will be doing through the month of April, I will be doing some charitable giving, and we'll do some things as part of the YouTube video and YouTube morning show, where if I get a certain number of thumbs up and shares and things like that, I'll do some donations. And I'm definitely thinking about what I can do for people in Ukraine. So anyways, that's something to look forward to for the month of April. But yeah, with that, I'll let you guys go. I hope you have a great day, and I hope this was helpful for you to make some notes and look at your metrics and try to see if there's something in your metrics that are pointing you in one direction or another. Try to keep improving. Always keep improving. No matter how many years of trading you've had, no matter how good last year was, you can always be humbled, and you can always find the opportunity to improve. So keep working at it. All right, thanks again. A reminder that my results are not typical. Trading is risky, and most beginner traders do lose money. So I encourage you to trade in a simulator before you put real money on the line, and don't try to blindly follow me or anyone else. All right, thanks for tuning in. I'll see you for the next episode. Morning show will be between 8:30 and 9 a.m. So make sure you subscribe to the channel and hit the thumbs up if you enjoyed this video.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up, and let YouTube know that this channel is the channel to watch if you want to learn about day trading.